Hello everyone and welcome to Just Chatting Forex Trading live on January 7th, 2026. So we are here to go over the dollar index, the Forex markets, cryptocurrency markets, and hey, you know what? Any markets that you're interested in talking about, you just jump in on the chat and we will see what's going on. All right, so right now I want to take care of some accounting business real quick. Oops, we got a little bit of a feedback, don't want that. All right, so we'll go to our forex-trading-unlock.com website and pull up our disclaimer real quick, because we want to remind you that this video is for educational entertainment purposes only. So get rid of this ad, we don't need that. So yeah, just to remind you that trading Forex stocks, options, binary options, what have you, all have a risk involved with them, and this is all for educational purposes only. So thank you very much for joining us. We have our Tradingview chart pulled up here, and if you are you can watch us on our website on the home page. You can check us out on Twitch too. If you want to, we have different offerings for our streaming, and right now we are doing our Just Chatting here on YouTube. So make sure to click a like, if you will, and if you haven't subscribed, also do that, and then also share it for us as well. Help us with the algorithms, if you will, and also leave a comment. You got any questions? If you watch this video later, we will check the comments, and then we will try and answer your questions, and maybe if you have any suggestions on markets, we'll do some stuff for you on that and try and answer some questions for you in afterwards. All right, so dollar index right here, pretty much unchanged on the day. It's a mixed bag of goods. You have divergence between most of the currency pairs around the world. Some are moving, some are not, some are up, some are down versus the dollar. So really, there is no real standout currency, if you will, today. However, there are some nice trade setups that are brewing, so we would like to show you what those are. So dollar index, like I said, right now pretty much chopping around. As we get closer to the Fed date coming up, odds are pretty good that it's going to start going sideways. So let's see, euro, US dollar. Okay, I'm all thumbs today. Euro, US dollar is pretty much unchanged, just like the dollar index. It's the biggest weight in the dollar index. Like I said, today is not a good day to be using the index as a guide. I expect the euro to probably be pretty much chopping around and going sideways today. And the closer we get to the Fed meeting, I think of all the currencies, this one's really going to go sideways. There's a good chance of it railing up towards an upside breakout level. Getting above that before the Fed meeting, I think, is going to be rough unless you see a really good pullback in yields, which could happen. If you see a sharp pullback in yields in front of the meeting, then yeah, we can. And we may even get just above the breakout level. The upside target level number one at 119.94 is the area I'm looking for us to get up to in the longer term, especially after the Fed meeting. But before the Fed meeting, I think it's going to be a little bit tough for it to do that. As far as falling below the downside breakout level, I think that's very unlikely. It could happen. Should it occur, the downside target level number one is the bottom end of the range this market's been in for months. Right now, it's in a corrective slide off of a rally it's been in since November, but if you go back further, it just bounced off the high end of the range it's been trading in for months. So a lot of sideways action, not too much activity to get crazy about with the euro US dollar right now. British pound, US dollar coming off a higher move high yesterday. It's like a little step stool going up a little higher slowly. Boom, boom, boom. You're leveling off, step up, level off, step up, level off, step off. Now it's leveling off again. It's been following this upward sloping trend line. It's about a 45-degree angle, which is a pretty good trend line when it comes to as far as whether it's a corrective move or even a trend move. Trading along a median 45-degree line is a solid trend to whether you're going up or down to follow. Anything more extreme or in one direction or the other typically means you're looking for it to fall apart sooner than later. This is as the extent of right now. It could be the little engine that could, and maybe it takes another 2 weeks or 3 weeks, but it could still get up to that upside target level number one. As far as the downside, I key off of this last swing low. If we fail from here, then I think you might get a pullback down towards this low. That's about it. The critical support zone, I don't see any reason in front of the Fed meeting for it to get down into this area right here. After the Fed meeting, perhaps, but there's a divergence in the two central banks, and I just really don't see right now having any fundamental or technical reason to believe that it would get down there. U.S. dollar Swiss overall in the long term isn't a downtrend, but it's been sideways for months. This is a really tough trade right now. It's been in basically a $3 range for months. Not a lot of action right now. It's in the middle. So to the upside, is it going to break out into the upside correction band? Probably not. I think at best it's going to hit the bottom buffer zone of it. It could get into it, but I highly doubt that's going to happen, especially in front of the Fed meeting. And in front of the Fed meeting and after the Fed meeting, I think you have a better chance of it pulling back and going down towards a downside breakout level, and maybe even falling below that. Now, is it going to be overzealous and start a real big trend move to the downside? Probably not. Anything can happen, but I'm not looking for that. I think that if it gets below there and sustains a trade below there, that over the next few months it could get down to that downside target level number one, down at the 76.07. So basically 76.10, 76 even area. Very viable downside target to inch along too. As far as right now and catching a trade on it to the downside, like I said, I don't think it's there. And even once you can if you can catch an edge and get a short on that one and ride it, I believe you're going to be sitting on it for a while. And the expectations are not very strong either. So keep that in mind right now. Reward to risk is just not really there. I say it's a no-go. I would stay away. U.S. dollar yen kind of quiet today overall. I think it's because you've had oil chop around over the past 2 days, making a good low and then bouncing back. Also, you got yields that are looking to go lower. I think you're going to see this trade slide probably over the next couple of days lower, unless you see a big rally in crude and the interest rates go higher. In the short run from the market, that might cause it to go back up towards the highs, but I don't think that's going to occur. My expectations are lower oil and lower yields. If those two fundamentals come into play, I think you're going to take out the last swing low from a week and a half ago during the holidays, and then continue lower. The downside target level number one is a very, very viable option, especially after the Fed meeting. And then even going forward, I think that the range trade zone on the bottom there area of the chart probably not going to get hit for a little while yet, but after the next Fed meeting, and especially come the springtime, by I would say mid-April, beginning of April, mid-April, you could see it starting not only trending towards that area, but getting very close, and possibly by April before May fall into that zone. Very good reward to risk ratio as far as a longer term trade, and especially if you knock it off in a good intraday way and catch a good lead on it, you could really get some good bang to your buck. I mean, overall, at the most, you'd be risking like a $1.50 to make upwards of $9-10 over the course of 4 months. That's a pretty good reward to risk ratio, and when you put it on, you could probably even get it, once you get it on, you could lower your stop and really have your reward risk ratio going through the roof, especially if you catch a nice little right before this thing starts to drop off the map. Because if you can sell it somewhere where it's at to higher, and then all of a sudden you take out that last major swing low there, then you're looking at that just at a downside target level. That's a nice trade. And I think that range trade zone right there and a chance to fill this gap here where the circle is very likely in the next few months. Not in the next couple days or the next couple weeks, so not even close. So we'll see what happens. That's my forecasting right now as far as the dynamics for this market. AUD USD. Oops. AUD USD. All right. Higher, move high today. A little bit lower now on the day, but it spiked higher. Higher, move high after a higher, move low. Trend says, let's go up, 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 and away. So this one is one of the diverging currencies, and I think you're going to continue to see it probably over the next few weeks into February, maybe even into March. Probably going to start to slow down as we head closer to the Fed meeting. I believe by the Fed meeting or just soon afterwards, though, that upside target level, which is at 68.31, is a very viable level to come close to, if not get to or through. And then as far as the UTL number 2, that's a longer term target which could very easily be reached, but not probably until April, closer to May. Excuse me. So I think that that's a good area where, for a long-term trend trade, that's not a rough one there. It's going to inch along. I would look to buy the next slide before trying to catch it, especially in front of the Fed meeting. As we head closer to the Fed meeting, you can get stuck in limbo. The best call probably is to wait for a little digestive phase in front of the Fed meeting, and then after the Fed meeting, look to get long and play the breakout to the upside, and give yourself a good chance to at least play it up to the UTL number 1, with UTL number 2 being a longer term objective once again, like I said. But see, if you're not even getting into this trade until the middle to end of January, and then you're looking at, right into February and March, that's not such a long-term trade anymore. Right now, it is, and it's just not. If you're not already in the long, there's no reason to really get too overzealous, just because it looks like a nice trend here, but there's not that much movement to capitalize off of. All right, New Zealand dollar, US dollar here. Now, here's something shaping up. We have a potential head and shoulders pattern forming up. Now, it has been going higher over the past couple of months, just like the Aussie, but it hasn't made a higher move high. It's made a lower move high. So this one here was the higher move high here, made a higher move low. Then it looks like it's making a lower move high. If this area here fails, then that means this is a shoulder, this is a head, this is a shoulder, this is our neckline, which means if it takes out this low, good chance it's going to take out the downside target level number 1. Takes out that level there, then there's a good chance that we're going to continue lower, at least between the downside target level number 1 and the downside target level number 2. Very possible for that to occur. We got to wait to see. It has to get below this area here and close to confirm it, but should it do so, that's a good indication that this market definitely is going to stay down. Right now, though, in front of the Fed meeting, we'll see what happens. Now, could it go higher and take out that last high? Absolutely. Is it going to go up to the upside target level number 1? That's a tough one. I think if it has any chance of getting up there, it's going to take every bit of a good month and a half to 2 months, and we'll have to have at least one rate cut happen in that time frame. All right. U.S. dollar Canada. U.S. dollar Canada. Come on. USD CAD. There we go. U.S. dollar Canada, right in the high right now. Not a big volatile day, but it's definitely a higher move high, and it's on its high right now. So dollar strength here is being shown for sure in the U.S. dollar Canada. The upside target level around that's about, I would say, is the extreme for an upside move, and I don't even believe that it's going to get hit before the Fed meeting. I think that this high today, maybe we get another push through resistance tomorrow into the claims number, maybe even into Friday into the unemployment claims number. After that, I see the market pulling back to at least a little bit and then going sideways until the Fed meeting. And after the Fed meeting is done, then seeing this market swing one way or the other. Is it going to fundamentally? I would say that it's going to end up at least going to test the downside target level number 1 sometime in the next 2 to 3 weeks. It came just shy of hitting it and then started this corrective rally, which right now we have to presume that it's a corrective rally, especially with the fundamentals that are in play. All right, so let's look at BTCUSD. Bitcoin US dollar spiked high 2 days ago. It's just off its lows today, looking pretty weak. It's big sideways, and I would expect more of the same. One nice thing about Bitcoin is it is kind of like the dollar index for cryptocurrencies, and there is a trade setup. So just like we have that head and shoulders trade setup that's going on in New Zealand, we have an ETHUSD. So for instance, whether you want to short or if you're long Ethereum and you want to maybe take a profit, not yet, but let's just say that hypothetically When the day rolls over into Thursday's trading on the chart, the market settles right where it's at right now. If it does that, that would be a bearish engulfing line, which is a sell signal. It's a high probable Japanese candlestick pattern. By the way, if you want to learn how to trade that kind of signal, I wrote a book called High Probable Japanese Candlestick Patterns. At the forex-trading-unlock.com website, you go to the products tab, and sorry for that popping up. And there's a little video about the book and some of the setups that you can trade off of. And here's also a little cover of the book, which gives you access to the link on Amazon where to buy it, as well as a little synopsis of little short snippets from the book. So anyhow, like I said, if it settles here at the end of the day, as it rolls into Thursday, that would be a bearish engulfing line sell signal. The market has been trending up into this point. Boom, you have this outside bigger day. Very good short-term sell signal. I would say shorting Ethereum probably is not the best idea at this area. I mean, you probably got a little bit of room, but it looks like a big range trade that's just going to be stuck in for a while. And I think you're just buffering up against the upper end of the resistance right now. So, but yeah, as long as Bitcoin is lower, especially if Bitcoin goes lower tomorrow, I think I'm going to follow through in this and have a good chance of catching a nice move. So if you are long physically Ethereum, if you can ever call it physically, that would be a good reason to maybe take some profits, or at least take a little off your position and look to buy it again lower. I think you have a good opportunity of being able to do that, even if for a little short scalp. All right, let's go back to the Dixie. And once again, pretty much just like it was when we started off this video. Not too much action. It's the middle of the day. European markets are closed. So, and we do have some numbers. I think everyone's waiting on the unemployment claims tomorrow, and also the unemployment number for December on Friday, because those two numbers should have some impact on the interest rate markets as well as the equity markets, and then get the currency markets for sure swinging. So we'll see how that all wraps up as we get into the end of the week. I want to thank you very much for your time here. Make sure, if you haven't already, subscribe to our channel, our YouTube channel. Make sure to like it and leave a comment in the comment section and share it with your friends. So thank you very much for spending your time with us today, and good luck with your trading.